My name is Martha Lenzner, and I am one of 5 Junior League of Wichita board members connected to some nonprofit board development training that we are doing in the community. All of us are certified as consultants through BoardSource, a national organization dedicated to supporting nonprofit boards through trainings, publications, and lots of tools. So in addition to conducting training sessions, for our league members and for the Kansas Nonprofit Chambers Board University Series, we are available to provide sessions and consultations for nonprofit community boards. So if you are interested in a full session on nonprofit financials or succession planning, fund development, etc., we have lots of tools that accompany those sessions, and you can contact me directly. My information is at the end of this presentation, or look me up. I'm around town. So as part of our BoardSource initiative, we've developed a series of brief modules, which is what we're going to present today. And this one is all about BINGO, B-I-N-G-O, Understanding Nonprofit Financials, Every Board Member's Fiduciary Responsibility. So we will jump right into this with our BINGO acronym, and there is an accompanying BINGO handout that you will find if you have found this presentation. So the purpose of this presentation, we're going to go over the basics of managing a nonprofit's financial resources, as simple as BINGO. So we'll go over monthly responsibilities, annual responsibilities, and then conclude with 10 things to remember. So key roles for board members. You see the 3 umbrellas here. These may be familiar if this is not your first time to participate in one of these sessions, but board members have a legal responsibility to give back to their nonprofits. We have a duty of care, which board members are expected to actively participate in organizational planning and decision making to make sure that there are sound and informed judgments being made. A duty of loyalty, which is when acting on behalf of the organization, board members must put the interest of the nonprofit before their own personal or professional concerns and avoid any potential conflicts of interest. And then there's the duty of obedience. So board members must ensure the organization is complying with all of the applicable federal, state, local laws and regulations that govern nonprofits, and make sure that you're committed to the nonprofit's mission. So what would a presentation be without a little cartoon? So here we have Snoopy encouraging us to embrace our inner accountant. First and foremost, embrace your inner accountant. So what are financial statements? Financial statements are informal written records of your organization's financial activities and position, and provide the information to identify your organization's financial strengths and weaknesses. The point here is do not fear financial statements. All right, starting with the B in BINGO. We have some monthly responsibilities that are important for board members. So normally you'll receive an email notifying you of the upcoming board meeting, and it's your responsibility first and foremost to review the prior meeting minutes. There's always a motion to review and approve those. And then 2, the real B here is balance sheet, sometimes referred to as the statement of financial position. So a balance sheet, traditionally recognized as one of the most important financial statements due to the comprehensive and illuminating information that it contains. And at its simplest, it shows what an organization owns, its assets, and what are the liabilities, what does it owe, and then what remains, the net assets at a specific moment in time. So assets are everything that the organization owns and are usually listed in the ability to get at that money as quickly as possible. So first and foremost, pretty easy to get at cash. Then comes accounts receivables, so money that is owed to your organization, followed by promises to pay. So maybe someone has promised or pledged contributions to your nonprofit. And then the little more meaty, a little more difficult to get to. So if you have some properties, if you have a facility, a house, equipment, those are things or fixed assets that you may have to sell in order to get to that cash. And then there are liabilities. So we have accounts payable. That's money that your organization knows that it owes to another vendor or supplier. So maybe some unpaid invoices. And then you have accrued liabilities, money that your organization estimates that it owes to others. And then current position of long-term liabilities, that's the portion of the long-term debt that your organization must pay, say within the next 12 months. And then there are long-term liabilities. So that would be outstanding debt that would be due beyond the 365-day mark, such as a mortgage or a tax-exempt bond. So the net assets, that's the difference between what the organization owns and what it owes. And net assets can be unrestricted as to their use of time, or they can be restricted assets, as a donor might put restrictions on how you spend those funds. And restrictions can either be temporary, so maybe over a moment of time, then they would be lifted, or they might be restrictions that never expire and then they cannot be removed. So as an example would be money that is put into an endowment is normally permanently restricted. So balance sheet, question you can always ask yourself when you're looking at those financials in the middle of that board meeting, do your total assets equal your total liabilities and net assets? So you always want them to equal, hence the idea that we call this a balance sheet. The assets and liabilities are equal to each other. So some good questions that you can ask when you are participating in a board meeting. How does the board oversee reserve funds and endowment dollars? Is your financial plan consistent with your strategic plan? And do you have sufficient reserves? So those are some good questions that you can ask regarding the balance sheet. Next up, the third report that we want to look at on a monthly basis would be I in bingo will be for income statement, sometimes referred to as a statement of activity or statement of activities. So the income statement, and another common name that you might see at the top of that report is budget versus actual. So you can see kind of what your spending is, what we budgeted and where we are in our spending. On this report, you're reviewing your revenues and you're asking yourself, hey, do we have some diversified income streams? What is the revenue that's coming in from our programs, our contributions, our grants? And the key question on this type of report is whether or not your total revenue is greater than your total expenses. So revenue, of course, is the income from providing goods or services that your organization's customers or members and other earning activities such as sales of inventory or maybe earnings on investments. Those are the types of revenue that you see. Contributions, those are assets that have been given to your organization in the form of cash, maybe stocks, bonds, art, property, etc. Expenses are what your organization spends to conduct its activities. So what are you spending money on in order to fulfill your organization's mission? Those might be program services, such as expenditures on goods and services used to fulfill the mission. Salaries and supplies might fall in that area too. Then there are management in general. So there are expenses related to oversight and management, such as record keeping or budgeting. Maybe you use some QuickBooks software. Those are types of general expenses. And then normally in every nonprofit, there are some fundraising expenses. So what are you spending in order to raise some dollars to support your mission? Non-operating income is revenue not related to your nonprofit's programs or mission. So the most common type is realized investment income, so maybe gains or losses from the sale of invested assets such as common stock or mutual funds that are owned by your organization. As most nonprofits, numbers change rapidly as money comes in and bills are paid. So this makes it hard to know how much money you've actually earned. The income statement answers that question. It tells you if revenue is going up or down and how much profit is left after deducting what it costs to operate your nonprofit. The profit can be used to grow your nonprofit or pay debt. The income statement does not tell you if your organization's financial condition is weak or strong, or what you own or what you owe, or what others may owe you. This is for the balance sheet. Net assets are the difference between what your organization owns and what it owes. And then the change in net assets, that's the difference between the revenues earned and the expenses incurred over a period of time, otherwise known as a profit or a loss. It's good to ask which type of accounting method your nonprofit organization is using. Is it a cash method, as described here on the slide, records revenues when it's received and records expenses when it's dispersed, or is it an accrual method, which records revenue when it's earned and records expenses when it's incurred? Most nonprofits are operating under a cash method. Some good questions on the income statement include, did the board approve the annual budget? Are there specific expense areas rising faster than the resources of income or the sources of income? And are key expenses, especially salaries and benefits, under control? Moving now to N, and looking now at annual responsibilities. So the prior responsibilities were things you're looking at on a monthly basis. The next 5 items will be what you're looking at on an annual basis. So when is that N 990 IRS form due? You should review your organization's 990 once a year, and a strong 990 highlights a nonprofit's missions and shows its compliance with federal regulations. An IRS form 990 is an annual required tax filing form. Just like as an individual, you file your taxes annually, the nonprofit must file their taxes annually. And then after this 990 is filed, it's typically available on websites and potential donors can review it. So next up, we're going to highlight the need for an annual audit based on operating budget figures. So not all nonprofits do an annual audit, but when your operating budget is around that $250,000, and so that would be equated to the annual income or revenue that you have coming in for your nonprofit, you might want to start considering an audit. Then once you get to the point of that $500,000 mark, as a board member, it's really a great idea for you to insist on an audit on an annual basis, so that everything is on the up and up and we're avoiding any financial disasters that could come from not keeping a close eye and having some outside auditors review your financials on a regular basis. And then 3, there are board committees that can provide some regular oversight to the full board. So the finance committee, their responsibilities are to oversee the proper performance of all the financial operations by reviewing the financial activities. They review and discuss the budget with management before it's presented to the board, and then they review other financial activities such as development. The audit committee, their responsibilities include accept and review of external auditors. So they may pick who is doing that audit and then review it when it comes in, as well as the investment committee has some responsibilities regarding drafting and overseeing investment policies. If your nonprofit is fortunate enough to have some additional reserve funds in order to invest, they act as a liaison with outside investment manager, and they monitor activities of an outside advisor to ensure investment policies are being adhered to. So some good questions to ask in this area, especially relating to the audit. If we have an audit, is it required? And is it a clean audit? Clean audit is a term. So clean means good in this case. And another question, does the organization have a policy for the organization's governing body or an approved committee or individual to review the Form 990 before it is filed? It's always great for the entire board to look at that 990, but maybe someone with a little more experience in that area could take a deeper dive into reviewing it and giving their report out to the full board. And then G, B-I-N-G-O, giving. What nonprofit could operate without giving? So revenue or income in your annual budget. So money obviously fuels your work. So nonprofits are mindful of the mix of funds that drive their engines. Healthy nonprofits make use of a wide range of funding sources and are mindful that different funding sources come with different accounting needs, donor expectations, and restrictions. So some good questions on giving. Does your organization have a diversified funding base? Or are we meeting guidelines and requirements set by our funders? And then finally, O, for oversight. Nonprofit board members are ultimately responsible for the effective, responsible use of nonprofits' resources. Oversight includes the policies and procedures designed to prevent fraud and ensure accurate reporting of the affairs of the organization. Some good questions for oversight. Are legal documents being filed timely? So is that federal Form 990 being filed timely? There's normally, in the state of Kansas anyway, an annual report to remain a nonprofit that must be filed. It has a small filing fee. And the state of Kansas registration statement of solicitations. So, ask your nonprofit, what forms are you filing and are they being filed in a timely manner? Couple more questions. Are cash controls in place? And has adequate insurance, including directors and officers, or D&O, fondly referred to, has insurance been referred to protect the directors and officers of the nonprofit? So, conclusions and questions. Your efforts on behalf of your organization constitute a valuable service. If serving on a nonprofit board, use the bingo handout to know what you should, at a minimum, be paying attention to. The nonprofits that serve the world today could not deliver their valuable services and products without the contribution of the time and effort of their boards. So take satisfaction and pride in what you do. The world is a better place for it. So 10 things to remember. Remember who your customers are. Number 2, first, loyalty, your customers. Second, the organization. 3, being a board member is serious undertaking. 4, develop financial literacy. Don't be afraid of those financial statements. 5, fraud and illegal activity could happen to your organization. 6, model ethical, honest, transparent, and accountable behavior. 7, obtain competent professional advice when necessary. 8, comply with all tax laws. 9, resist the temptation to manage the organization. That's not the board member's role. And 10, regularly assess the areas of risk related to the organization. So if you have any questions, as I mentioned before, there's my contact information. My number is 316-304-1075. And if you have other consulting needs or some future trainings are of interest, be sure to visit Junior League's website or the Nonprofit Chamber of Services.